The stock market goes, so goes the wealth and the health of the American economy.
What the market is telling us is that we are on the road to prosperity.
In the skyrocketing stock market, and that benefits everyone.
The stock market has gained almost $3 trillion in value since the election.
It's the late 1800s. You are holding on to $1, and you have just decided to put it into the U.S. stock market. Little did you know, that single dollar would go on to embark on a journey of unbelievable highs, gut-wrenching crashes, and everything in between. For the next 150 years, that dollar would grow, shrink, and rise again through wars, depressions, and panics, defying all odds. But what happened along the way? And why does the stock market keep bouncing back despite all the setbacks? Today, we're diving into a timeline of financial history like no other, where $1 turns into $19,000, with some serious drama along the way. But before starting, let me show you a quick highlight of what the stock market crash looks like over the years. An expert tweeted which says, "Here are the most disastrous crashes and the lessons they have taught investors." The picture explains all the disastrous crashes the stock market has faced to date. But some of you might say, how would we know what those crashes were and why they were disastrous? So that's why we are here today to delve deeper into all of these events in detail, leaving no room for ambiguity. This also holds some lessons for the current stock market investors. So buckle up and stick to your seat as we move back in history. Our story begins in the 1870s, a time when the United States was transforming into an industrial superpower. Railroads were the backbone of the economy, connecting cities and enabling commerce. But like any new industry, enthusiasm crept in. The result? The Panic of 1873.
The state government didn't have much to do. The rules are very few and far between. In other words, it was a jungle.
It all started with the collapse of J. Cook and Company, a major bank heavily invested in railroads. The news sent shockwaves through Wall Street, sparking widespread bank failures and layoffs. Several articles published their bankruptcy highlighting the title, "International Panic as J. Cook and Company Fails." What followed was a 6-year depression, one of the longest in U.S. history. Imagine waking up one morning and finding that your life savings had vanished, your job was gone, and your future uncertain. That was the harsh reality for millions. But the financial chaos didn't stop there. In 1893, another crash swept the nation, triggered by debates over whether to back the US dollar with silver or gold. Known as the Silver Agitation, this debate led to a full-blown panic. Imagine this: the US was debating whether to back its currency with silver or stick to gold. Farmers and miners loved silver. They thought it would pump money into the economy. But the government? Not so much. The debate caused uncertainty, shaking investor confidence. Next up is the Baring Brothers crisis of 1890. This was basically Lehman Brothers in the 19th century. A British bank known as Baring Brothers nearly collapsed after a series of investments in Argentina. And since everything was connected, even back then, it created a world of financial panic. And just a decade later, the rich man's panic of 1903 struck. Confidence in industrial companies plummeted, and once again, the economy stumbled. But that was just the beginning. There was the panic of 1907. It was so bad that J.P. Morgan himself, yes, that J.P. Morgan, had to step in with his own money to stabilize the markets. Imagine Elon Musk pulling out his checkbook to stop a global financial meltdown. Yeah, it was that wild. The early 20th century brought rapid innovation, but with it came instability. In 1907, the Knickerbocker Trust Company collapsed, triggering the infamous Panic of 1907. Stock prices tumbled, and public confidence in the banking system evaporated overnight. People lined up for hours, desperate to withdraw their money from failing banks. It was chaos. But this crash gave birth to something pivotal. The Federal Reserve, created in 1913 to stabilize the financial system.
It It was really the panic of 1907 and the subsequent crisis in 1908 that led to overcoming the political reticence to a central bank, led to a number of proposals that ultimately ended up in establishing the Federal Reserve in 1913.
And then came the Roaring Twenties, a decade of wild speculation and excess. People believed the good times would never end. They bought stocks on margin, borrowing money they didn't have to chase profits. It was too good to be true. On October 29, 1929, Black Tuesday, the illusion shattered. The stock market lost $14 billion in one day. Families lost their homes, their savings, their dreams. What followed was the Great Depression, a period of profound suffering that reshaped the global economy and society itself.
The tremendous crowds which you see gathered outside the stock exchange are due to the greatest crash in the history of the New York Stock Exchange in market prices.
The 1940s call in another kind of chaos, World War II. The economy went to war. It shifted to building weapons, vehicles, and supplies. The stock market was certainly not booming, but held steady until the war was over.
The outbreak of World War sparked a panic that closed the market for more than 4 months.
World War II brought the U.S. out of the Depression, and the post-war years saw an economic boom. But the market wasn't immune to shocks. The 1970s were tough. Imagine this: inflation was through the roof, unemployment was high, and the stock market was a mess. This was the era of inflation, Vietnam, and Watergate. First is inflation. Prices rose so fast that people were losing their buying power. Then there was the Vietnam War, dividing the nation. Not to forget the Watergate scandal, which shook trust in political and economic systems.
I want to say this to the television audience. People have got to know whether or not their president is a crook.
By the late 1970s, the market was in the grip of the inflationary bear market. It was a brutal time for investors, but those who stayed the course were rewarded in the decades to come. On October 19, 1987, the market fell 23% in a single day. Black Monday remains the largest percentage drop in history. Investors were in shock. How could a market that seemed so strong collapse so quickly? The answer was computer-driven trading, which exacerbated the panic.
They're calling it the Monday Massacre, the worst drop in Wall Street history.
I just came from inside and it looks like a madhouse.
It was a wake-up call that even in bull markets, danger can strike fast. The early 2000s were marked by tragedy and uncertainty. Following the 9/11 attacks, markets froze, but they bounced back again, showing once more their resilience. Then came the 2008 financial crisis. Remember the panic of 1907? This was like that, but way bigger. Banks had been handing out risky loans, and when the housing market collapsed, everything unraveled.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
It was the worst day on Wall Street since the crash of 1987.
Lehman Brothers filed for bankruptcy, the stock market crashed, and the world was at the precipice of another Great Depression. The 2010s witnessed growth like never before. The big techs, Apple, Amazon, and Tesla, were everywhere, and the stock market had never been better. The lost decade in the early 2000s reminded us that long-term investing isn't always easy. COVID-19 pandemic, the pandemic triggered one of the fastest crashes and recoveries in history. The market dropped over 30% in weeks in March 2020. Of course, thanks to central bank interventions, it rebounded just as fast. So, what's the takeaway? The lesson is clear. The market is volatile in the short term, but remarkably resilient in the long run. The key is staying the course, even when it feels like the world is falling apart. From the railroads of the 19th century to the tech-driven markets of today, the history of stock market crashes is a story of greed, fear, and recovery. And while we can't predict the future, we can prepare for it by learning from the past. If you enjoy this deep dive into market history, please like, comment, and subscribe for more content like this. Remember that investing is a marathon, not a sprint. Stay patient, stay informed, and keep learning.